Amazing, looking forward to it. Now it's time for today's phone-in. Sarah Tucker, aka the Mortgage Mum, is here to help. We've got lots of calls today, right?
We did, we got lots of calls.
OK, so first of all, let's go to our first line. It's Jessica. Good morning, Jessica.
Hi there.
Hello, good morning. What's your question for Sarah?
So I'm due for remortgage at the end of the month.
Okay.
Since my last remortgage, I have become self-employed.
Mm-hmm.
I'm looking to move in the next year, so I'm just thinking, how will becoming self-employed affect remortgaging?
Yeah.
And would it be best to get on a fixed rate or start the variable until I move?
OK, so a few questions there. So firstly, when you're self-employed, you really do need to think ahead. You have to be really organised with your accounts. So traditionally, they do like 2 years' worth of accounts and they tend to average the two. But don't panic, because there are some lenders that will take 1 year of accounts. So that's something for you to think about with the timing of your self-employment. Now, when it comes to your remortgage, you can speak to your current lender and you can still do a rate switch if you've had a change in circumstances. But if you haven't got that 1 year of accounts, you may struggle to remortgage away from that lender. You asked me whether a fixed rate or a variable rate is the right thing because you're looking to move, which is super exciting. A fixed rate's going to give you stability, but it does tie you in. So there'll be an early repayment charge, and it can be quite expensive if you do want to move and break away from that mortgage. But importantly, you can take it with you. So I would just say if you do a fixed rate and you want that stability, especially with a new business, I know how that can be, then you want to make sure that it's portable. So just make sure with your advisor that you're making sure you can take that with you. Equally, if you look at a variable rate, I would actually call it a tracker. That doesn't tie you in. OK, so you can track the Bank of England base rate, which may come down in November, but it could also go up. So it doesn't give you as much stability as a fixed rate, but it's a bit more flexible in terms of you moving with your business, starting, you know, you may have a change in circumstances more than most. Hopefully that answers all of the questions.
So the budget we know is coming on the 30th of October, but as you say, that cutting the base rate, with inflation dropping so significantly, the expectation is they will do that? I mean, is it?
Yes, I mean, I think they are going to, but that's just an opinion. We never really know.
Can't be sure.
But the inflation was a big part of this. The Bank of England really wanted to see if inflation was going to come down and stay down. But of course, they will be looking at all other aspects, the swap rates, for example. But we do hope, we've been predicting for a few months that there would be 2 drops in the base rate. And I think people are really looking for confidence.
Yeah.
And if the Bank of England do that, if they're listening, then it will give people confidence to move and to remortgage and to trust the rates.
Okay. Yes. Hopefully that helps, Jessica. Let's go on to Diane then, who is in Warwickshire. Morning, Diane.
Morning.
Good morning.
What's your question, Sarah?
Oh, hi. Just wondering if you can help me. It's regarding my son, whose commission-based salary. His mortgage comes to an end in February 25, and he's on Help to Buy, which also ends in February 25. Now, we know that he has to pay off his Help to Buy because after 5 years, the interest is very large. So he knows he has to pay that off. So would it be best for him to remortgage now with the Help to Buy, pay them off and start again, sell the property, stay in the property, go to a broker, go to a bank?
Yeah,
just unsure which is
Lots
the
of
best thing to
questions,
do, really.
OK, well, firstly, the Help to Buy loan is a really important subject at the moment because there's lots of people like your son who are coming off of that 5-year fixed rate. And for those of you who don't know, the Help to Buy scheme ended in March 2023, but actually it was a great scheme to help people get on the property ladder. It allowed you to have 20%, like you say, interest-free for 5 years. Now, I might be throwing a bit of a spanner in the works here, but you don't have to end the Help to Buy and pay it off at this point. You can do a Help to Buy remortgage. So the rate in year 6 is typically 1.75%, which is a lot lower than the interest rates you're going to get now. However, in year 7, it's a little bit less favourable. So I would say add that to the list of things to think about because people out there perhaps weren't given the advice around Help to Buy if it ended. It's 20% of the value of your property or 40% if you were in London. So if you sell the property, you're going to be giving 20% back to Help to Buy. And one thing I really want to get across to those people who are potentially doing a Help to Buy remortgage is it takes more time because you've got to go to the Help to Buy to get a certain document as part of the legal process, and a lot of people end up stuck on a variable rate because they haven't got that document in time. They haven't allowed enough time. I think you said February.
How long does it take?
I would say, I mean, act now, I would say ideally 6 months before, which is what we would say anyway. And if interest rates change, you can get your deal repriced. But the most important thing is legally you get this document so that you're not sitting on a high variable rate and there's nothing you can do and other than chase it and ask your solicitor to chase it. So he's got quite a few options. He could sell, he could remortgage. That's important. He doesn't have to be pressured into paying that Help to Buy off.
Diane, do you think he'd like to stay there if he can?
Well, I think because it's only a 2-bed, so he would really like to go to a 3-bed.
Right, yeah.
Right, okay.
So he's unsure which is the best thing to do, really.
Yeah, so, I mean, if he does want to move, then absolutely look at affordability. It's going to be a bit of a shock because he's not used to paying anything on that 20% mortgage. But he could still, you know, be in a position to afford to move. So I would say probably speak to an advisor and actually get it all out and look at all the pros and cons of every option.
Sounds like a lot of options on the table.
Complicated.
It is.
Good luck, Diane. Thank you.
Lovely. Thank you very much indeed.
Thanks, Diane. OK, next up, let's go to Francis. Good morning, Francis.
Hiya. My question is, basically, I've just been made redundant and my mortgage is to be renewed next year in March.
Okay.
So obviously I want to start the process and what can you guys do for me in that sort of situation? Obviously, I am looking for another job at the moment, but I don't know how long that would take. So it's just a bit of recommendations. What, you know, do we stick with the same, you know, the same bank or, you know, what advice would you give?
OK, well, I am sorry for you that you got made redundant. I know it can add a further complication and it become even more stressful when you're looking at your mortgage. You've got time. You said that your mortgage runs out in March, and I want to get across that you don't have to have been your job for a long period of time. We can actually look at mortgages even with an offer of employment, or some lenders will want to see just 1 month's payslip. So let that take some of that time pressure off of you. If the worst case scenario is you haven't got your job in March, you're not going to be able to remortgage away from your current lender, but your current lender should still be able to talk to you about switching your rate. So really, I want to try and alleviate some of the additional stress. It's stressful enough trying to find a job, but there are going to be options for you. You've just got to make sure you get the advice at the time with the circumstances you're in.
Okay, that's fine. And do you think I should literally tell the truth to the broker at the time, or should I leave it? Because I'm due to see them in the next couple of months.
Yeah.
So
absolutely tell them the truth. Absolutely. The right advisor is going to talk you through it because, you know, you've been made redundant. It isn't your fault. You're not trying to do anything you shouldn't be. You're just trying to get the right advice. So absolutely be as honest as you can, and your advisor will guide you, hold your hand through the process. That's what they're there
There's
to
no
do.
benefit in trying to keep it from your broker as well, because the broker's best interest is getting the right product for you, Francis. So they need to know all the information. Hopefully that will help. I'm sorry, as Sarah said, that you've been made redundant, but fingers crossed you can find a new job soon.
Thank you.
Thanks
so
Francis.
How are we doing for time? Oh, no, we're out of time. I was so involved with that. I wasn't even listening to anybody. So I'm so sorry.
They are very quiet in there, actually. They were very quiet. I think everybody was listening away to you, Sarah. It's very good.
For that.
So welcome.
You must come back soon, especially with the budget coming and obviously that base rate, if that goes down, which would be good news.
Yeah, I'd absolutely
the
love
impact
to.
of that on lots of people would be great.
Thank you.
Sarah.
Thanks for having me.
Thank you.